politicians just want to spend, spend, spend. They don't want the constraints of the market. They don't want the constraints of gold. So, basically they will continue to spend us into bankruptcy. But Russia and China, for that matter, will need to protect themselves from our collapsing currency. So Russia doesn't have to do an awful lot to, in terms of evolving its economy in order to put it on a gold standard. It could do it tomorrow if it cared to do so. And it's very easy for a country which actually understands what it's doing to build its gold reserves and maintain them.
Alasdair Macleod, a noted economist and financial expert, offers keen insights into Russia's potential to adopt a gold standard. He highlights the country's low debt-to-GDP ratio of around 21 and 22% and favorable tax system as key factors that make this transition feasible. Macleod suggests that Russia could quickly shift to a gold-backed currency, especially given its robust gold reserves and economic stability. Russia's finance ministry recently announced plans to spend 8.2 billion rubles, approximately $92 million, daily on gold and foreign currency from September 6th through October 4th, amounting to 172.9 billion rubles, around $192 million, $1.9 billion. This initiative underscores the country's commitment to strengthening its financial position amidst global economic challenges. Macleod argues that the current fiat currency system is nearing its end, emphasizing that certain nations, like Russia, need to consider a return to a gold-backed standard. This move is particularly relevant as Western economies grapple with unsustainable money printing practices. Adding to the conversation, Elon Musk recently warned that the U.S. is going bankrupt extremely quickly, pointing to the increasing pressures on the U.S. dollar. With federal debt surpassing $35 trillion and interest rates at a 23-year high, concerns about the fragility of the U.S. economy continue to mount. Musk and other experts suggest that the situation could deteriorate further, making exploring alternatives like a gold-backed BRICS currency all the more pressing. Furthermore, the discussion surrounding a BRICS currency backed by gold is gaining traction. Such a currency could be crucial in diminishing reliance on the US dollar, especially as the value of gold surges. While the BRICS alliance has not prioritized a native currency, the push for de-dollarization remains strong amid ongoing economic challenges. Please tune in for our exploration of Alasdair Macleod's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
Look at history. Fiat currencies only last a certain amount of time. Our fiat currency system, which I suppose has basically been, well, sort of post-war because it was a fiddle under Bretton Woods. But when Bretton Woods fell apart, then, we're looking at, 52 years, 53 years of fiat currency, pure fiat currency. I think it's almost time now, if you like, if you look at the survivability of fiat currencies, we've done pretty well lasting this long. It's now, I think, about to fall over. I mean, as I say, I don't know whether it's tomorrow or in a year's time or 2 years' time or 3 years' time, we'll see. But we will go back to credit being secured to the value of gold. And in order to do that, you need to have as much convertibility as possible from what becomes, instead of being a fiat currency, it becomes a gold substitute into gold and vice versa. And a properly constructed gold standard basically means that nobody bothers about gold anymore, but the values are secured to it, which is the important thing. And you don't need to hold gold. You can actually hold the currency and use it productively. So, but the one thing that is necessary for this really to work is to have an economy which isn't dominated by government spending and has relatively low taxation. So there is the incentive for entrepreneurs to rush out and invest capital in production. And actually, this is precisely the situation in Russia. The debt to GDP in Russia, government debt to GDP, is in the order of about 21, 22%. And that's even after all this war spending. It's just remarkable. I mean, obviously, they've managed to achieve this because they sell an awful lot of oil and other commodity exports. But the other thing is that the level of taxation is a flat rate of tax of 13 to 15%. I mean, if you're really earning a lot, it's 15%. No more than that. Corporation tax, I think, is in the order of about 25%. So that's pretty normal, I suppose. So Russia doesn't have to do an awful lot to, in terms of evolving its economy in order to put it on a gold standard. It could do it tomorrow if it cared to do so. And it's very easy for a country which actually understands what it's doing to build its gold reserves and maintain them so that that cover is always there for the currency. And, in this article, which will be coming out, as you say, on Thursday, probably slightly before this comes out, actually explains the whole thing. I mean, it's very easy to do. But of course, the problem in the West is that governments don't like a strict, sound currency because it means they can't just sort of print it at will. They can't just finance their deficits at will. The politicians just want to spend. They don't want the constraints of the market. They don't want the constraints of gold. So, basically, they will continue to spend us into bankruptcy. But Russia and China, for that matter, will need to protect themselves from our collapsing currency, because if our currencies collapse, any other fiat currency will go with it. I mean, because it's the whole of the fiat currency system, which is really well past its use-by date. So Russia, I think, is going to have to consider doing this. Now, of course, at the moment, everybody's talking about BRICS bringing in a gold-backed currency.
Alasdair Macleod highlights the ongoing financial shift, with the People's Bank of China playing a key role. Contrary to popular belief that China is accumulating gold, it is reducing its exposure to the US dollar by selling off dollar reserves. China's holdings of US government bonds fell to $776.5 billion in July, down from $780.2 billion in June, though it remains the second largest foreign holder after Japan. Japan's holdings dropped to $1.16 trillion in July, the lowest since October. In contrast, according to U.S. Treasury data, Singapore increased its U.S. Treasury holdings to $234.2 billion in July, up from $219.6 billion in June. Macleod argues that as foreign investors lose faith in the dollar, they are left with limited alternatives. Traditional currencies like the euro and sterling are similarly vulnerable to economic risks, making gold more appealing. This trend has been reflected in the gold market, where prices surged nearly 20% in 2024, driven by substantial central bank purchases, rising consumer demand, and heightened interest in safe haven assets amid geopolitical uncertainties. Gold's status as a hedge against inflation and currency volatility strengthens, reinforcing Macleod's assertion that it remains a key asset in the face of weakening fiat currencies. Let's get back to the interview.
There are two stages in this. I mean, we're seeing the first stage at the moment, and I think the best example of it is the People's Bank of China. Everybody thinks that the People's Bank of China has been buying gold. They got it the wrong way around. Actually, what they're doing is they're selling dollars. So they're trying to get out of dollars. Now, there is a political element in that, sure. But the Chinese can see exactly what's happening. I mean, the debt trap, which I've just described, the Chinese understand this. They're not idiots. The Russians understand it, and they're just watching the whole thing about to topple over. And, and nobody wants to get blamed for the whole thing falling over. But the foreigners in particular understand that you've got to sell dollars. So what do you buy? Do you buy euros? Sterling? Not really. I mean, you might get out of dollars into some of that stuff, but it's in exactly the same trap as the dollar, just maybe not quite so bad in some cases. Where do you go? You go into gold. Why gold? Gold is legal money without counterparty risk. All the rest is credit with counterparty risk, particularly fiat currencies. I mean, what you have with the dollar is it depends entirely on the faith you have in the US government. Foreigners' faith in the US government, is this something that is likely to persist? I think foreigners at the margin are beginning to doubt their faith in the dollar. And I mean, it always starts with the foreigners. They're the first to understand that they shouldn't be holding a fiat currency. The residents of a country who use the currency don't actually appreciate this in the initial stages. They will do a double take on this and they will think, well, you know, prices are rising. This is terrible. They don't actually connect it with the falling purchasing power of their currency. But when they do, then the currency is toast, is had it, it's finished. And that, I think, is the next stage. I mean, I don't know how long it'll take for people to begin to understand this. But I can tell you they really, I mean, domestic residents in America and the UK do not understand this at all. You know, they think a pound is a pound, a dollar is a dollar, and I can, you know, go out and spend it, hang on to it, whatever. And its price is rising as far as they're concerned, not the purchasing power of their currency going down. At some stage, they will wake up to this. And then it's finished. It really is finished. The fiat currency world is finished. And I don't know how long it'll take. I mean, in the 70s, we got nearly to that point. Really, I think following the devaluation, which was what, 1968, something like that. And then we got to, in the 70s, we had the crisis where the IMF bailed us out in sort of around about the end of 1975, beginning of 76. Interest rates had to rise to 15% plus. I mean, well, that was the government was forced, the Labour government at the time was forced to do something which it really didn't want to do, and that was raise taxes, cut spending, which it did. It had to bring the budget back into balance, and the thing was saved. We're a long way from this sort of activity. But until then, the currency was collapsing. I mean, I remember briefly, inflation was recorded at 24.5%. You know, I mean, think what that does. So this sort of 70s problem, which I think we now face.
As global economic uncertainty deepens and faith in fiat currencies wanes, the conversation around gold-backed currencies becomes more relevant. With countries like Russia and China exploring ways to reduce their reliance on the US dollar, and as central banks continue to buy up gold in record amounts, are we witnessing the beginning of a global shift away from fiat currencies toward a more stable, gold-backed financial system? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.